Mr. G. Chokkalingam, who's Executive Director and Chief Investment Officer at Centrum Wealth Management, joining us on the show from Bangalore. Mr. Chokkalingam, just yesterday someone was saying that we are in a firm bear market, that any bounce should be viewed as an opportunity to sell. Would you agree with that?
Certainly no. For simple reason that, India's growth story is known for rebounding. In the last 30, 40 years, if you take, India's GDP growth has never fallen more beyond, 2 years or 3 years. But even in 3 years, fall was very rare, accompanied by serious doubt in the country. And secondly, the valuations are appealing. And third, still India is going to be the second fastest growing economy in the world. Fourthly, even if you look at the March quarter corporate earning number, the profit growth has been 21% year on year, while net sales have grown at around 18%. So considering all these facts, we still firmly believe that India is a place where, a lot of stories will play out, in next 6 months to 12 months time. And even on dollar, we firmly believe that it is because of the perception and fear factor, which have, brought down the rupee to around the 55.50 or 56 level. Even that should rebound. The last trigger point, on which we have a lot of hope is that post-presidential election, the government should try to push all the pending reforms. That's our last hope, and we firmly believe that there is no choice also left to the government. So that should also act as a major trigger for the market. So hence we remain quite optimistic, and we find that 16,000 Sensex is a rock bottom, and a lot of stocks are available at appealing valuation.
Mr. Chokkalingam, to add to another trigger, you have the RBI monetary policy, which is also awaited in a few weeks. What's your expectation from the same? Because the clamour seems to be getting louder for a rate cut now.
We firmly believe that the RBI should go for minimum 50 basis point cut once again. For simple reason that our belief is that RBI has gone very aggressive in tightening to 375 basis point in the recent cycle. If you look at 2008 and 2010, when we had a double-digit inflation, RBI was successful in bringing down the inflation rate to single digit with anywhere from 125 basis point to 175 basis point hike in the benchmark rate. This time we have gone overboard. The inflation was caused by the crop prices and oil prices, on which we don't have any control. Both are, exogenous to the system. But by hiking the interest rate aggressively, we brought down the manufacturing sector to degrow by 0.3% in the last quarter. So it is high time we firmly believe that RBI cuts down another 50 basis point. And also the last fact is that the developments in the Western world is always anti-inflationary for Indian economy. That was proved to be right post-Lehman. We had even negative inflation post-Lehman crisis. And we are seeing now also in oil prices. Oil prices are already down 22-23% in the last 35-40 days. So considering all these facts, we firmly believe that RBI should go for a minimum 50 basis point cut.
Mr. Chokkalingam, what would be your portfolio strategy? Do you believe that it would be good to bet on the defensives, given that there's so much market volatility, or would it be perhaps on the banking pack, given the expectations of the RBI?
Answer is that we should have a defensive strategy for portfolio. It doesn't mean that we should go after traditionally what we call a defensive sector, because the defensive sectors like FMCG, they are already overpriced. So what one has in the FMCG sector, one can continue to hold, but the defensive strategy could be in terms of great deep value stocks, and we would suggest putting 60% of the money in the great deep value mid cap stocks, where the dividend yields are very high and a robust business model is there. And the remaining 40% in the sectors like bank and other large cap stocks where we don't have any uncertainty. So we would pick up stocks in the fuel producers, and also some of these engineering companies where the leveraging is not an issue or the corporate governance is not an issue. So I would suggest putting 40% in the large cap and 60% in the mid cap, and go for individual stock picking with a defensive strategy in mind, because 17th you have the election in the Greece. So of course I firmly believe that they are not going to destroy the Indian economy or market, but still they can create a nervousness in the short term. So for next 1 or 2-3 months, one can go for a defensive strategy by going after individual stock ideas.
Right now, but just looking at the real estate sector, do you believe valuations on many counters within that space have been beaten down enough for investors to be entering there?
It is beaten down beyond what they deserve, but tactically speaking, it may take some more time for the sector to, pick up the momentum in their growth in earnings. For simple reason that, you have to see the interest rate coming down in real terms for them, and their cost of borrowing should start falling. Then only they can improve their own balance sheet, as well as they can increase the demand for, their own real estate output. So I would rather wait for another one quarter before going after the real estate sector, because I firmly believe that it will take at least 3 months for them to see the benefit of a reversal of interest rate cycle.
And lastly, Mr. Chokkalingam, if you could take us through your top 3 stock picks.
One, I would present Reliance Capital. In the last 4 years, the stock is down almost 85%. If you look at insurance business as well as asset management company, the valuation of these 3 businesses alone, 3 times the current market cap. The second stock, I would go after Sundaram Fastener in the mid-cap space. The stock, the company is managed by a well-reputed TVS group, and it's available at around 7 PE on 1 year forward earnings. And in this, current difficult situation, the exports have grown 35% in FY12, and which account for 1/4 of the total sales. They would be the beneficiary of recent depreciation of rupee as well. The third stock, I would strongly recommend Karur Vysya Bank. I still feel very confident about, ultimately the banking amendment law seeing light, through Parliament. Post the presidential election, I expect the banking amendment law being amended and 26% stake, allowed to have a full voting rights. So that would be a big positive for Karur Vysya Bank. So these are the 3 stocks, I would recommend strongly.